action.
This is the story of MFS. After a decade of firsts, MFS would soon be called to lead the industry once again, this time as its defender. In the aftermath of the Great Depression, President Franklin Delano Roosevelt had a mandate to punish the irresponsible funds that contributed to the crash and to make reforms so it never happened again. The question for MFS's leaders was whether Washington was going to put the entire industry at risk in the process.
Perhaps there were some lemons out there in the form of regulation, et cetera, and maybe there was some lemonade to be made by getting involved in the process rather than hiding from it.
So, MFS did. The firm's focus on the long term includes the industry as a whole. And in the 1930s, no one advocated harder for the mutual fund and the middle class than MFS chairman Merrill Griswold.
They became very active, both with the Revenue Act of '36 and with the work going up leading into the 40 Act.
It started in the summer of 1935. MFS teamed up with its competitors in Boston, State Street, and Incorporated Investors to oppose a new double tax on investors. And together, they went to Washington to engage and collaborate with the government.
I look back historically, and you have to imagine that the way MFS came together, even thinking about democratization of investing, was at the core of collaboration and working for a higher purpose.
When the doors to the Oval Office swung open, Griswold and two other mutual fund titans entered, carrying the fate of the industry on their shoulders. Their conversation with FDR was short, but it led to key provisions in the Revenue Act of 1936, effectively saving the mutual fund industry while championing the needs of everyday shareholders. Some say it was the most important 10 minutes in the history of the mutual fund industry. Collaboration continued through the 30s. MFS was on a mission to inject responsibility into the industry.
The trustees of Mass Investors Trust were very much working closely with Washington and the regulators to help formulate what would be the best governance and overriding standards that an open-ended mutual fund should have. In fact, they say in many respects, the regulators looked what was already in place with Mass Investors Trust and simply copied that.
This was the run-up to the Investment Company Act of 1940.
Somewhere in the process, the Boston guys concluded that being covered by a federal statute that regulated conduct and gave national reach to the Boston fiduciary principles that they'd been living by anyway would be a positive development for the growth of the mutual fund industry.
MFS's bylaws provided the template for the entire industry. Its advocacy provided the push, and against the odds, the 1940 Act passed.
The press and most of Congress would have said that those bills wouldn't go through, but the industry, particularly MFS, stepped in and really supported the 40 Act going through and was passed, and that's a pretty amazing thing.
In many ways, it was the business version of the Ten Commandments. It said that people who register under the 40 Act are going to live by the Golden Rule, and everybody will be better for it.
Industry-wide regulation, written with MFS DNA. All the while, MFS continued to grow funds, assets, and shareholders through the New Deal period, one of the few firms to do so.
I think the other kind of interesting story is our second fund, which is Mass Investors Growth Stock, is what we would call it today.
As a result of new regulations, MFS acquired a small fund and launched it in 1934, renaming it Massachusetts Second Fund in 1940.
This is a solemn but a glorious hour. I only wish that Franklin D. Roosevelt had lived to witness this day.
With the economy on the upswing, the firm's trustees decided to develop the second fund by investing in growth companies to offer more options for clients in the early 1950s. But what was a growth stock? MFS tasked research analyst John L. Cooper with figuring it out. He created a matrix to characterize them and inspired another name change. A first for the industry, MFS's growth stock fund and the diversification it represented laid the groundwork for the evolution of the firm's platform. MFS rode the wave of post-war prosperity. When Chairman Dwight Robinson sat down with Time magazine in 1959, MIT was the largest mutual fund in the U.S. After the cover story ran, the firm was a global sensation. The way Robinson talked of protecting OPM, other people's money, and how mutual funds address the long-term needs of investors, large and small, captured imaginations.
When I started MFS, I was given the picture of Dwight Robinson on top of Time magazine. Again, it gives you a sense of, okay, this is a lasting institution and it's a place that I'm proud to be part of.
Responding to dynamic forces in the world, MFS created value from the turbulent 30s through the go-go 60s, holding true to its conservative character and putting clients first. But as the 1970s beckoned, one of the firm's greatest sources of strength was beginning to reveal its vulnerabilities.
I have characterized the creation of Mass Investors as having been cursed a little bit by the first mover disadvantage.
If the firm was going to launch new funds and address the challenges facing investors, something big would need to change.